Welcome back. It's time for business, and I'm joined by William Edwards. Hello again,
Hi,
William.
Claire.
Now, we saw it coming, didn't we? But the boost the markets got from the election result in Greece didn't last very long, did it?
No, it didn't even last through the whole day on Monday, actually, on the markets. The European markets ended mixed, as did the US markets. Let's take a look now at how things are going in Asia at the moment. And you can see that what little enthusiasm there was still in the air by the end of trade in the US markets has now completely evaporated, as you can see, with the Nikkei down over 0.7% there, so quite considerably negative territory. Why the worries? Well, of course, apart from the fact that the Greek election hasn't exactly solved the problems of the Eurozone, there are also additional worries about Spain, which continues to see an increased borrowing rate. Yesterday, there was another Euro-era high for Spain's rate of borrowing. It hit 7.3%. You can see that this morning, so far, it's slightly down from that high, but still, nevertheless, in dangerous territory there. 7%, of course, being the magic figure in the Eurozone crisis so far. Ireland, Portugal, and, of course, Greece, when they went above 7%, they never really came back down again with their borrowing rates, and then they had to take an EU bailout. So worries there about Spain.
We're going to stay with Spain because there's been industrial action in the north of the country.
Yeah, I mean, it's ongoing industrial action, really, because these strikes, there are mining strikes going on. They've been going on for around a month now. You can see there, this is Monday, where thousands of people took to the streets of a number of northern towns. Around 50 towns have been involved in these strikes. Mining is still a major industry in northern Spanish communities, and the government, as part of its deficit-cutting drive, has cut coal industry subsidies by around 2/3. Now, of course, a lot of people would argue that this is perhaps a move that is needed. If the industries aren't competitive, then these subsidies shouldn't be given. But, of course, this is the middle of a financial crisis. Perhaps this isn't the time to be doing this sort of thing. And, of course, the miners are particularly angry, just as the Spanish banking system receives a 100 billion euro bailout. They're getting their subsidies cut. So you can see anger on the streets there in northern Spain.
And all of these concerns about the Eurozone economy are weighing heavily on G20 leaders who are holding a summit at Los Cabos in Mexico. It seems that their focus is now on growth policies, with austerity getting less of a look in.
Europe is center stage as the leaders of the 20 most industrialized nations gather in Mexico. On the agenda for the G20, global employment and growth. As he opened the summit, host Felipe Calderón was firm that all necessary measures must be taken to end the global crisis.
We can determine a long-term plan of action, a program we all want for our people, for growth, which generates jobs and which works towards equality and justice.
European leaders are under particular pressure. There have been increasingly vocal calls for the EU to shift from austerity to growth, a position that could leave German Chancellor Angela Merkel isolated on the world stage. Although Greece seems on its way to forming a government, the US and China fear the economic crisis could spill over the Eurozone borders. The UK insisted that proposed reforms must be followed through and pushed for closer ties with Washington.
The EU and the US make up over half of the world's GDP. A deal here, a real free trade deal between the two of us, could provide an enormous boost to growth across the world.
Some optimistic language as the leaders expressed confidence that they can restore global growth. But the struggles of Greece, Spain, and Italy still cast a shadow across the Atlantic on the sunny shores of Mexico.
Next, Apple has a new competitor on the block when it comes to tablet computing.
Yeah, and it comes from Apple's arch rival Microsoft. They've decided to get into the hardware game again with what they're calling the Surface tablet computer. Here you go, you can have a look at it there. You can see that the cover doubles up as a touch-sensitive keyboard, which is rather a nice feature that the Apple iPad doesn't have. It's also got a USB port, which the iPad is lacking, and it's got a good amount of onboard storage, so quite a bit going for it, really.
What are the negatives, though?
There's always negatives, aren't there? Of course. It is a little bit heavier than the iPad. Of course, it won't have the iPad's app ecosystem from day one. Also, there are two different models which are slightly confusingly different. They are based on different processor architectures. Now, if you can understand this, one is based on Intel, one is based on ARM processors, and they both run slightly different versions of Windows tablet computing operating system. That may overcomplicate things slightly for the consumer, as Microsoft products have done in the past. But of course, Microsoft are hoping that now there will be three big players in the tablet operating system market. There will be not just Apple and of course Android, which is powered by Google software, but Microsoft as well in the third place.
I have to see how well they do. All right, now location, location, location. That's long been the mantra of property investors, but recently some wealthy French buyers have also had a close eye on other factors, like the new socialist president's taxation plans. For those who can afford it, it could be time to look further afield.
It's certainly a fabulous panorama of Manhattan, but Xavier is a French stockbroker looking not at the view, but at the investment opportunity. He wants to buy to let in the Big Apple. His target is a risk-free placement.
It's about securing liquidities. If you invest in a good location, you can sell on when you want.
It's not cheap, 2 rooms and 100 square meters for $1.9 million. But it's also a money spinner, renting for up to $7,000 a month. For that price, all mod-cons and more are of course included. There's a gym, a pool, and a bar overlooking Central Park. Xavier had been considering buying somewhere in the south of France, but François Hollande's election did make him think twice.
With the new government, one thing's sure, and that is that there won't be a reduction in the taxes. Rather the opposite. It's not really very encouraging. Lots of my friends and family have asked me how it works here.
It is a trend that's good for business if you're in real estate, an uptick largely generated by the situation on the other side of the Atlantic.
The election is one factor among other factors, like the euro crisis, as well as the uncertainty for Europe and for France.
With that in mind, the US will remain a target for well-heeled French investors, not just in New York, but in other surefire locations like Los Angeles and Miami.
And that's it for business. Thanks very much, William. And that's it from me for now. I'll be back in half an hour. In the meantime, you've got Stuart Norval, who'll be bringing you the latest headlines in just a couple of minutes' time.